Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Amphenol Corporation Annual Report. Amphenol Corporation offers a diverse range of products and services across various industries. At its core, the company designs, manufactures, and markets electrical, electronic, and fiber optic connectors. These include high-speed, radio frequency, power, and fiber optic interconnect products, as well as busbars and power distribution systems. In addition to connectors, Amphenol provides value-added products such as backplane interconnect systems, cable assemblies and harnesses, and cable management products. The company also offers a variety of other products, including flexible and rigid printed circuit boards, hinges, mechanical components, and production-related items. Furthermore, Amphenol supplies consumer device, network infrastructure, and other antennas, coaxial, power, and specialty cables, as well as sensors and sensor-based products. These products cater to various markets, including automotive, commercial aerospace, communications networks, defense, industrial, information technology and data communications, and mobile devices. The company sells its products through a combination of direct sales force, independent representatives, and a network of electronics distributors. This extensive distribution network enables Amphenol to reach a wide range of customers, including original equipment manufacturers, electronic manufacturing services companies, original design manufacturers, and service providers. Amphenol Corp's stock price has skyrocketed by over 109.24% in the past year due to a combination of strong financial performance, strategic acquisitions, and surging demand from artificial intelligence (AI)-related applications. The company's consistent record-breaking financial results throughout 2025 have been a major driver of its growth. Amphenol reported exceptional growth across all quarters of 2025, consistently beating expectations with record sales and adjusted diluted EPS. The company's strong performance was fueled by its expanding role in the IT datacom sector, particularly driven by artificial intelligence investments. Amphenol's strategic acquisitions have also played a crucial role in its growth. The company completed several significant deals throughout 2025, including the acquisition of Trexon for approximately $1 billion and CommScope's Connectivity and Cable Solutions (CCS) business for approximately $10.5 billion. These acquisitions are expected to greatly boost Amphenol's capabilities in the IT datacom market. The booming demand for Amphenol's products in the AI-driven IT datacom market has been a major catalyst for its stock surge. The company noted record bookings directly related to AI-driven applications and data center demand, further fueling investor confidence. Analysts have responded favorably to Amphenol's performance and future prospects, upgrading its stock ratings and raising their price targets throughout late 2025 and early 2026. The company's optimistic outlook for the first quarter of 2026 has also contributed to positive market sentiment. Overall, Amphenol Corp's stock price has skyrocketed due to a combination of strong financial performance, strategic acquisitions, and surging demand from AI-related applications. Amphenol Corporation market capitalization of $176 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Amphenol Corporation holds a significant advantage in their industry. Amphenol Corporation trades at a higher price-to-earnings ratio of 43 times and a higher price-to-book ratio of 13.16 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of Amphenol Corporation's revenue growth or decline are multifaceted, encompassing various factors that contribute to the company's financial performance. One significant driver is acquisitions, which have played a crucial role in fueling revenue growth through notable purchases such as CommScope and others. Net sales have also been a key contributor to revenue growth, with substantial increases observed over the years. For instance, net sales rose by 52% from 2023 to 2024, and an impressive 191% from 2024 to 2025. Geographic revenue growth has also been a significant factor, with notable increases in the United States, 62%, China, 44%, and other foreign locations, 118%, from 2023 to 2025. Segment revenue growth within specific regions has also been a driver of revenue growth, such as Communication Solutions in the United States, 117% increase, and Harsh Environment Solutions in China, 9% decrease. Other drivers include changes in foreign currency exchange rates, interest rate fluctuations, product sales, customer purchase orders governed by master sales agreements, and non-recurring items like acquisition-related expenses, bargain purchase acquisitions, and tax benefits. Industry trends and operating performance also play a crucial role in shaping revenue growth or decline. As the company navigates changing market conditions and economic landscapes, these factors can either positively or negatively impact its financial performance. The net income of the company underwent significant changes between 2023 and 2025. Initially, it decreased from 2023 to 2024 due to acquisition-related expenses. However, this trend reversed in 2024 to 2025, with an increase in net income attributed to higher sales in the fourth quarter of 2025 and the impact of acquisitions. The overall change was a substantial increase of $2,846.3 million, 116%, from 2023 to 2025. Profit margins also experienced fluctuations during this period. They increased from 2023 to 2024 due to strong operating performance and higher sales volumes. Conversely, they decreased from 2024 to 2025 due to acquisition-related expenses and non-cash amortization of acquisition-related inventory step-up costs. Despite this decrease, profit margins still showed an increase of 3.8 percentage points from 2024 to 2025. Segment-wise analysis reveals varying trends in profit margins. The Communication Solutions segment saw a significant increase from 21.5% in 2023 to 31% in 2025. In contrast, the Harsh Environment Solutions segment experienced a slight decrease from 25.9% in 2023 to 26.2% in 2025. The Interconnect and Sensor Systems segment remained relatively stable before decreasing to 19.4% in 2025. The company's financial performance is a positive indicator of its ability to generate cash from its core operations. The operating cash flow has been consistently strong over the past 3 years, with no instances of negative or zero operating cash flow reported. According to the provided data, the net cash provided by operating activities has increased steadily, reaching $5,374.7 million in 2025. This significant increase demonstrates the company's ability to generate substantial cash from its operations, which is a key indicator of financial health. The consistent positive operating cash flow over the past 3 years suggests that the company is well-positioned to meet its financial obligations and invest in growth initiatives. Overall, the data indicates that the company is generating strong positive operating cash flow, which is a testament to its efficient management of core operations and ability to generate cash from its business activities. The company's debt level has undergone significant changes over the past few years. Initially, as of December 31, 2024, the total debt outstanding was $2,991.3 million in net cash proceeds from borrowings. However, by December 31, 2025, this amount had increased to $23,350 million. Furthermore, a comparison of the debt levels between 2023 and 2025 reveals an even more substantial increase, with total debt rising from $6,659 to $15,412.80. In terms of interest expenses, there is evidence of both increases and decreases over time. For instance, interest expense as a percentage of net sales decreased from -1.4% in 2024 to -1.6% in 2025. However, the absolute value of interest expense increased from $217 million in 2024 to $367.8 million in 2025. Additionally, interest expenses were reported to have increased by $67.4 million due to Treasury locked derivative instruments settled in 2025. The company's debt level and interest expenses have undergone significant changes over the past few years. While there are some discrepancies in the data, it is clear that both metrics have experienced notable fluctuations. The performance of various segments and regions within the company has been mixed. On a positive note, Communication Solutions and Harsh Environment Solutions have shown strong results with high segment operating incomes of $3,746.6 million and $1,541.4 million respectively in 2025. The automotive segment also performed well, contributing approximately 15% to the company's net sales in 2025. The acquisition of Outdoor Wireless Networks, OWN, and Distributed Antenna Systems, DAS, business from Vistance Networks, Inc. Andrew has been a successful addition to the company's portfolio, providing a wide range of products and technologies that complement its existing offerings. Furthermore, the company's global operations have performed well, with a strong competitive advantage due to its global presence. On the other hand, Interconnect and Sensor Systems segment has struggled, with a low segment operating income of $1,005.1 million in 2025. This segment requires attention and improvement to meet the company's overall performance expectations. Management is outlining a comprehensive strategy for the company's future. The primary goal is to provide customers with high-quality products and design capabilities worldwide, while controlling costs through modern manufacturing technologies and strategic acquisitions. To achieve this, management plans to focus on emerging technologies such as next-generation wireless networks and fiber optic interconnect capabilities. The automotive market will be a key area of focus, with advanced interconnect systems, sensors, and antennas for hybrid and electric vehicles. Research and development efforts will concentrate on product areas with broad market applications and significant sales potential within a 1 to 3 year period. Management also emphasizes the importance of sustainability, viewing it as both good stewardship and good business. This includes making sustainable choices, building strong relationships with stakeholders, and engaging in good corporate governance. However, management acknowledges several risks and challenges that may impact the company's outlook or strategy, including global operations risks, cybersecurity risks, compliance risks, and potential fines and penalties for noncompliance. Despite these challenges, management is optimistic about the company's growth prospects, citing robust organic growth across various markets and elevated capital spending into 2026 to support growth in the IT datacom market. The company has made significant investments in acquiring new businesses to expand its portfolio. In 2025, the total investment in acquisitions was approximately $3.8 billion, funding 5 different deals. The most notable acquisition of this year is the purchase of Vistance's connectivity and cable solutions business for an aggregate purchase price of around $10.5 billion on January 9, 2026. In addition to these large-scale acquisitions, the company also acquired the Outdoor Wireless Networks segment, OWN, and Distributed Antenna Systems, DAS, business from Vistance Networks, Inc., in January 2025. Furthermore, the company acquired CIT at an unspecified date. These acquisitions demonstrate the company's commitment to growth through strategic investments. The company has not made any divestitures, indicating that it is focused on expanding its operations rather than selling off existing assets. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company declared and paid significant dividends, with $909.3 million declared in 2025 and $802.2 million actually paid out. This trend continued in 2024, where $662.9 million was declared and $595.1 million was paid. In addition to dividend payments, the company has also been actively buying back its shares. In 2025, it repurchased 7.4 million shares for a total of $665.2 million. Furthermore, the company still has authorization to purchase up to $826.9 million of its common stock under the 2024 stock repurchase program. This demonstrates the company's commitment to returning value to its shareholders and reducing the number of outstanding shares in the market. Concerns about inventory buildup or supply chain disruption are evident in various sections of the report. On page 9, it is noted that supply chain constraints and logistical challenges may impact the availability of raw materials and components. This concern is further emphasized on page 14, where difficulties obtaining certain raw materials and components due to inflationary pressures, increased commodity prices, and regulatory restrictions are highlighted. The potential for supply chain disruptions due to extreme weather conditions and natural disasters is also mentioned on page 16. Furthermore, the report highlights the acquisition-related inventory step-up costs of $77.8 million in 2025 on page 33. Additionally, the negative impact on operating margin related to acquisitions is noted on page 36. The purchase obligations of $2,083.2 million, with $2,006.9 million due within 1-3 years, are also a concern, page 39. The difficulty in obtaining raw materials and components at reasonable costs due to supply chain constraints and logistical challenges is mentioned on page 48. Finally, the increase in raw materials and supplies, work in process, and finished goods from 2024 to 2025 is noted on page 71. These concerns suggest that there are potential risks associated with inventory buildup and supply chain disruption, which may impact the company's operations and profitability. That concludes the financial summary for Amphenol Corporation. Feel free to comment below, and I will be happy to answer them when possible.